Broadcast. Today is Thursday, May 23rd. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. This is
Dan Hussey with Zaner Ag Hedge.
I am Zaner Ag Hedge Joe. Welcome to today's Zaner MarketCast. Dan, how are you doing?
I'm doing good, Joe. How about yourself?
I'm doing terrific. So we got a couple things that we want to cover today. Certainly some important stuff and maybe some stuff that's not so important, but we're going to cover it anyway. Interestingly, we were talking about this before we came on. Yesterday, I was using an electric chainsaw to chop down a small tree, and it was sort of bittersweet for me because the tree, when I moved into my home, was just this big. And yesterday, I had to try to chop that sucker down. Beautiful tree, beautiful. I don't know, some sort of fir tree or Christmas looking tree that somebody had planted before I got my house, and it was actually growing into my house, so it had to come down. I had some discussions with the tree and sort of verbally attempted to get it to grow in a different direction, which of course did not work. So I was forced to try to use at first a battery powered Sawzall, which I thought would just chop it right down, and it didn't. So then I was forced to go back into the garage and pull out the electric chainsaw that my father had scored for some other work that he had to do, and I am somehow in possession of an electric chainsaw purchased from maybe Harbor Freight. Certainly they are not sponsors of our podcast, but I will say their company name out loud anyway. Harbor Freight battery operated chainsaw, which I then used to attempt to chop down this tree. And at one point, a woman from across the street who is let's just say I'm always happy to see her. She came all the way across the street to maybe cast aspersions on the fact that I was using an electric chainsaw, and it almost didn't make any noise. It looked like the electric chainsaw was attempting to maybe talk the tree into coming down. It was not maybe the most manly thing I had done all day.
But did it work out for you?
It did end up working out.
Sounds like the project worked.
It did end up working out, but it was just it was a pretty wild story using an electric chainsaw. I personally am prone to my preference. Instead of spending $20,000 to chop down 8 or 10 or 12 trees, my preference oftentimes is to rent a chainsaw that uses gasoline and then chop down just anything I can find.
Sure.
Old wooden fence from people I don't know, trees, cars, whatever you got that we could chop down. Once a man gets a gas-powered chainsaw in his hands, I mean, you're just chopping stuff down. But as we were talking, battery-powered things these days, I think that there are guys that chop stuff down with battery-powered chainsaws for real, like really good ones that are purchased from American-made companies.
I mean, I can speak to owning a Tesla. I think we finally got to the point where, that's not electric chainsaw, obviously, but electric vehicles, right? Battery-operated anything.
Those don't run on gasoline?
They do, confirmed. It does not run on gasoline, at least what we're putting into the car, right? You can make your own assessments on where the fossil fuel industry is still fueling the power grid. But the point being is that, it used to, right, have a negative stigma with a lot of electric power tools, as well as electric cars, that you didn't get the power, you didn't have the longevity that internal combustion engines do. And there's a lot of truth to that in situations. But man, oh man, since battery power and amperes and wattage has gone up in that these things can put out, I think they're finally at the point where you can get some serious, horsepower out of electric products that 10, 15, 20 years ago, you would have laughed, at down the street. But hey, markets today.
How about markets?
Wow.
Absolutely.
Lots to update us, I think, on our...
Let's do a quick market recap for the day. Of course, this is not the weekly recap because this is a Thursday edition of the Zaner MarketCast. Let's take a look at the numbers. Corn, we opened at 461 and a quarter. The high, this is July corn, of course. High was 467 and a quarter. Low was 458 and a half. Last 464 and a half for a change of up about 3 and a quarter. I believe that we are above all of the moving averages there in corn.
Except for that 200-day, which is still above us.
Is there a 200-day up there?
Way up there, right?
Okay.
I mean, that's actually kind of been the failing point for both corn and beans. The last kind of stigmas up is the inability, at least in the December contract. Certainly, I think, 200-day in the July beans is a little bit higher, but that's where the failures, kind of came out of today.
Interesting. Beans, opened 12.45 and 3/4. July beans high was 12.58 and 1/4.
New high for the month.
New high for the month.
Not
Actually,
quite the year.
You had a high from the 7th of this month, 12.56 and a half. Took that out. Then that made us look at the January 1 high, which was 12.59. Did not quite get over that.
Wow.
However, low 12.36 and the last 12.39 for a change on the day of down about 7 and 1/4. Some differing opinions on what that could mean, but really a rough look for today.
Never a good look when you're down double digits off of a high, down on the day. You can make an argument it still has higher highs and higher lows, and it held trendline support and yada, 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 but I don't care which way you spin it. That was an ugly looking candle.
No export announcement and zero new crop beans in today's export sales, right?
That's correct.
They were an unknown.
Right.
So a lot of talk about Chinese arriving.
The Chinese purchasing hasn't potentially been there yet. Unknown.
Out of the Pacific Northwest.
Yeah.
So maybe a little disappointment in that today. And maybe we get a rally after we get more confirmation, if we get confirmation. Meal opened 378.20. The high was 382. Low 374.60. Last trade 376.80. That was down 140. Same thing weighing on beans is probably weighing on meal. Yeah.
Mm-hmm. Yeah, you just think so, right? It's the bean complex, particularly the beans and the meal, when the rallies have been real and it's been the meal deal, as Ted would say. That's been a good indicating factor that, hey, maybe you should go with this rather than fade it. Meal not having a very strong day either leads you, the optimist in you wants to say things are going to continue higher, right? But the reality and if you're going to stay open-minded, you got to take and play a little devil's advocate here and wonder, what went on today that could have stopped the market dead in its tracks on a day that was otherwise looking like it could have been a breakout.
Answer to that is likely increased farmer selling and then the resultant hedge pressure. That sort of has to wend its way through the market. Market has to gather itself. And then maybe you need some sort of bullish input now to get this thing to really move into new high territory. And that, I don't know what that would be. Is it weather?
I would say a lot of the bullish news, whether it be this delayed plant, which obviously has, as of our last progress report, has kind of evaporated. Whether out of Ukraine and in Russia, particularly more for the wheat market, that's gotten that's gotten a little overdone and chewed on now. We need that catalyst, right? Something to make and cause a change in the decision-making process for the players in the marketplace.
And still some talk, speaking of which, in terms of catalyst, bean oil opened 45.88, high was 46.48, low 45.11 right there on the close. Last trade 45.13, down 0.75. Still some talk maybe about action being taken on used cooking oil as we go forward. Maybe something there for the administration to work with. Wheat opened at 6.94. The high was 7.02 and a half. July wheat, rather nice comeback in wheat. Low 6.82 and a half. Last trade closed over the magical $7 mark, 7 even and a half cent. That was a change of 7.5 on the day.
It's almost like the opposite of what we saw. Well, I shouldn't say the opposite. It's almost like we saw the same type of price action in wheat yesterday that we saw in beans today.
Absolutely.
So that's why we're maybe not so ready to throw in that the towel for the beans just yet, because all intents and purposes, we've been trading ranges in the beans. We're in a 20 to 30 cent range. It kind of ratcheted up to a new 20 to 30 cent range. Wheat's been doing the same thing. $7 is a hard level to break through. But if I'm not mistaken, was today the first day of a close above 7?
Could be true.
Did I hear you say?
Could be true. You might be right.
It's definitely one of 2 days in the last
a few
year.
It's still notable.
Absolutely.
Still in that $7. No matter how you look at it, right? Various technicians have various ideas. Various market participants have different ideas. But anytime you can get out over that round number, to me, is significant.
It's like, it's like any other indicator or arbitrary line in the sand, right? I mean, there's a reason.
And a lot of times you'll see selling around those round numbers, right? And so to me, it just makes sense to look at that in a favorable light. Real quick, position squaring in front of Friday, which is tomorrow's cattle on feed, right? Fat cattle opened 184.30, high 184.67 and a half, low 183.20. Notable last trade 183. I can't read my own writing. over 183. Looks like maybe 183.12.
And this was 8 or 9 days up in the row for cattle. It's been a very bull market.
Pretty positive, no pun intended, right? Pretty positive, but toward the end of the day, we gave up a little bit. And that same with feeders, opened at 262.50, high was 263.37.5. Last trade 260.92.5. I'm sorry, low trade 260.92.5. Last trade 261. Feeders kind of came off the highs, likely position squaring ahead of tomorrow's report. But by and large, and you mentioned this a minute ago, feeder cattle and fat cattle both trading
many days up in a row.
Many days
at
up
least
in a row,
7,
right?
probably 8, 9. I forget what I counted earlier.
And that's, to me, that's kind of a jump right into
that. One of our stories today.
If you don't mind, second human case of bird flu confirmed amid U.S. dairy cow outbreak. Right. A CBS Health Watch story. Not really where I go to get my market news, CBS Health Watch, but with something like this, and we have certainly had jokes, and we'll have more. But to this point, so 2 human confirmed cases, animals that get infected, it runs its course in 8 days with no real damage. Worst symptom so far, second person had pink eye. State health officials announced in a statement Wednesday, marking the second human case associated with the current outbreak in U.S. dairy cows. The latest patient who had been in contact with cows presumed to be infected, had mild symptoms, eye infection, and has recovered, according to a statement shared by the CDC. Center for Disease Control and Prevention, the CDC. Risk to the public remains low, Michigan health officials said. So far, the virus does not appear to have spread from person to person, but public health officials are closely monitoring for any signs of the virus mutating to transmit more easily. The worry would be if it changes in mutations, genetic composition, yada, 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 yada. So it could more easily
jump
spread
from human to human.
Right?
That is being cited as the cause for concern, right?
Now, real quick, just a quick comment on this. So we had the stories in the southern part of the United States, I think specifically Texas, right? Was it Texas and New Mexico?
Right? March, April.
When we first blew this story off as part of our podcast fun.
But it became a good rationale for why the cattle market had pressed off of contract highs, had fallen
pretty solid,
solidly dipped down, right?
But that happened
good
in
rationale
Texas.
for that, right?
That happened in Texas. The gentleman that caught pink eye recovered and is going on happily with his life. But now that the birds have actually migrated from Texas up into the northern part of the country, stands to reason that we might see a case as infections increase with these migratory birds.
Yep.
But the interesting thing is that I have not heard in mainstream press such as this of any further cases in Texas. And so is this a thing that happens as the birds make their way through the United States and then the stuff works its way? I certainly am not, just even talking about it makes my head spin.
It's the logical explanation for how this virus has traveled. We know it comes from the birds migrating. That's a fact. We know it's transmitted to our livestock, and then we're getting it from the livestock more. That is the assumption here. And the one thing I hate about all this is the presumed to be infected wording. They say that because obviously no test was done to factually say that this is the case. I mean, okay, not to deny the story, it's definitely something to talk about, but man, it's becoming a stretch. And when you look at the market participation, particularly what cattle has reacted to this, it did not care. Second case, we're at the highest levels in months and breaking. By the way, the attempt today was to break out of a trend line, it looks like, from contract highs through the highs of March before this story ever broke. So in some effect, the markets are trying to break out of levels that began any kind of sell-off around this. That doesn't mean, strike me as something that is financially a concern for the cattle world now.
We're all the way back. And this is my opinion, and I would want to
change, but
preface this comment is that we've seen a number of shots, a number of bites at this apple, right? So pink eye in Texas, virus fragments, testing ground beef, another pink eye now in Michigan. 5 times we've tried to turn this into a big story that should kill the cattle market. But one problem with cattle may get highlighted tomorrow in the cattle on feed is that the numbers still aren't there. Still not seeing adequate heifer retention
it's not slowing down.
There aren't the fundamentals
the processing.
in place. The demand, even though there could very well be challenges working their way through the economy, demand seems to be fine.
Yep.
Exports, even China stepping up to pick up some beef. I mean, really, this is not a recipe as of yet, or as you can see on the chart, this is not a recipe for lower prices.
Right. And by all means, the story can change in a moment. We start to get rapid number of cases.
We've seen it.
Different story.
Sure.
But as things stands, the facts and figures that we're looking at doesn't seem to be something that is a major concern to the cattle world. And the cattle trend seems to be charging on from a technical perspective.
Sure does.
With the fundamentals of a pretty steady slaughter pace and consumption through the supply chain. Box beef cutouts remain strong. And quite frankly, I will go back and continue to kind of reiterate that I see any kind of slowdown in the slaughter pace right now and in processing as a factor of a lack of supply that suppliers can't get through rather than a lack of demand. And that's bullish.
I'll be interested to see what happens after the open of barbecue season. So, right, you're coming into the holiday weekend.
Into that time when
everybody's going to be grilling.
Demand.
Let's see.
Our first big weekend.
Yeah, let's see if we can carry it.
Happy
Let's see if we can
Memorial
carry
Day
it
to
post
everybody too.
What's next?
So in other news, U.S. winter wheat ratings took a dip. Corn and soy seedings top estimates, and the USDA lowered its U.S. winter wheat crop conditions out of Reuters to 49% good to excellent in its weekly crop report on Monday. That's down a point from a week ago and 2 points over our 5-year average. The crop condition was still the highest for this time of the year since 2020. And weather problems in Europe and the Black Sea region are raising continued concerns about that global supply, which has lifted the benchmark for the Chicago Board of Trade wheat futures on Monday to the steepest rally in 10 months. Midwestern farmers, meanwhile, raced to plant spring crops ahead of this rains this week, which I believe here saying that about 70% of the corn crop up from 49, and higher than the 68 trade estimates for corn is great. But I also believe that spring wheat estimate came in, which I don't have here in front of me, but I believe for all intents and purposes, we're looking at the spring wheat as being completed in the plantings now. So, the wheat trend in trade seems to be getting a little long in the tooth with these weather concerns, particularly out of Europe, and conditions remaining somewhat steady. Okay, wheat market arguably, and probably a reason for the sell-off yesterday, looking for a bit of a reason to continue rallying outside of maybe just the technicals on the chart. The weather market stories here are starting to get a little long in the tooth, but nevertheless, those conditions report still being at some of their highest levels since 2020, not something to sneeze at either.
Now, this you mentioned the technicals. This chart looks really great, right? I mean, right. we have come a ways in wheat. Wheat had been knocked down from very high levels to where we are now, and this rally has taken back a lot of that. There's still some. You look at that, and now we're kind of in rarefied air here, where I don't see where the top can be.
It's weird, right? You even look back to prices like last year. We're already through a lot of levels. With prices and levels that, if you compare to the beans and the corn, I wish we were up at them, right? I mean, wheat's kind of at proverbially, if you're to kind of throw a dart at the relative levels for corn and beans, it's already above $5 if it were corn, and it's already above 13 if it were beans, at least in the July contracts, and probably getting close there if you're considering November.
And you're seeing that highlighted in this wheat versus corn spread, right?
Yes.
This wheat versus
corn spread. A lot of spreading
is
there in the intra-commodity spreads.
Value of the wheat versus corn, which conversely is what the news is saying is that maybe that's going to lend some support to corn because that makes for a cheaper feed alternative globally. And so that, to me, that'll be very interesting to see how that plays out. I wonder, technically you look at this wheat chart and you think, okay, that precipitous decline, it was terrible, but now you're chopping up in here and there really aren't many swing highs to run into to arrest this thing. And so we'll see if the fundamentals, if we do get some sort of fundamental fall off and we're telling the same story week after week, it'd be difficult for wheat to continue to rally. Yeah,
absolutely. In other news here, the House Agricultural Committee has drafted their bill-based acreage payments over the next 6-year period, and they'll go up 36% for corn, 80% for beans, and 78% for wheat. It's kind of interesting how much wheat and beans are getting a boost here from this new ag bill. The three crops that account for nearly 80% of all of our acres. Per acre payments for cotton would be the biggest, well, next behind rice, I should say, at 153%, over the same stretch, while payments for rice and will go up 187. Those three crops make up about 8% of our acreage. While all wheat farmers' base acres might get a $16 an acre under the House Farm Bill, a peanut farmer would receive $255 an acre. So there is some serious subsidies coming in here and hitting some of our agricultural markets. And it'll be interesting to see how that, actually influences on-farm decisions into next year. We'll just leave that comment for another day because, who knows? This year it's a little too late, but next year, if you've got that big of a floor behind beans and wheat, it does seem like they're trying to take acreage away from corn to some extent here. I mean, that is over double the payments here for beans and wheat, which is amazing to consider. The House proposed reference prices change to magnify existing disparities in expected payments on a per acre basis. Overall, the economists estimating changes to the ARC and PLC would cost anywhere from $31 billion to $72 billion over 10 years. That's a pretty big swing. But when you consider the amount we're spending on just interest payments on our national debt alone, that's pennies on the dollar, right? Compared to those, which is crazy. The National Corn Growers Association stated in a letter that the group backs the changes to the ARC and the higher reference prices. Still, the NCGA is also particularly concerned about the language that would create a new price floor for corn at $3.30 a bushel, which is similar to a floor put in place for cottonseed. Essentially, if the price crashed dramatically, commodity payments would only pay up for the gap difference between the PLC price at $4.10 a bushel down to $3.10 a bushel. The NCGA stated that floor was unfairly applied to corn farmers. So that's a massive, 80-cent drop in the floor price. At a $4.10 a bushel, I can also look at a chart of corn right now and say, hey, if we roll over, $4.10 a bushel is not that far off compared to that $3.30.
No doubt about it.
Imagine next year that 80-cent floor feels a lot like a rug pull, which is, I think, what the NGC is getting at here.
And with the start to this crop, it doesn't take a lot of imagination to say.
Assumption the crop gets in with the wet conditions, that's good groundwater.
The difference between 177 and 181 stocks to use could be significant.
Absolutely.
We should have somebody from Corn Growers Association come and talk to us about this.
We should.
Maybe we know a guy
out there.
Yeah, maybe we know a guy.
You're watching. Call us in. We got a fun question of the week here because I've unfortunately got to go. I've got a text where a water line in my kitchen has broken and need to go attend to that. So that's fun.
Question of the week. Did we hear you last week? Did you Photoshop or whatever you tech people call it yourself in, or did we hear it out loud? Carter? All right, Carter. Shout it out.
Carter. Best piece of advice ever gotten.
Always build bridges, never burn them.
I'll have to remove the obscenities, but it was from my father, and he said it's always a good time for you to shut the heck up. And sometimes I listen, and sometimes I don't. But it's certainly good advice.
I hate having to wrap it up quickly here, guys, but thanks for listening to the Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or Twitter and LinkedIn at the Zaner Group. If you have not already checked out our Daily Ag Hedge hotline, where you can call in every day to get daily agricultural updates from the one and only Ted Seifried, please check that out. We got links in the comment section and information section of this video.
It's free.
Always free. The information is over here. You can find and sign up for this in the links we provided. Thanks again, and be sure to comment and leave a like or follow the podcast to not miss the beat, and we'll be back with you as price action develops.
Have a great holiday weekend.
Happy Memorial Day, and enjoy the grilling season.